Good morning. Today we're going to look at how to complete the accounting equation and do the analysis of transactions. Before we do that, we're going to just do a quick recap of what we should know already. We use the same steps to do the accounting equation as what we would to post to the general ledger. So in order for us to do that, we need to know the rules of how the different types of transactions will react. And that is where assets increase debit, decrease credit. Liabilities and owner's equity, decrease debit, increase credit. Expenses increase debit, decrease credit. And income decrease debit, increase credit. We're going to follow these same steps by first of all determine the general ledger accounts, classify the accounts and decide if they will increase or decrease, and then according to the rules above, if we said it's an asset and it increase, we know it will be on the debit side. So according to those rules, we will then decide is it a debit or a credit. When it gets to the source documents, there's a summary of the different journals and what documents go onto which journal. So it's important that you also know that. When we get to the accounting equation, it's assets equals owner's equity plus liability. Assets from the steps above, easy enough. We did the calculation of what happened to assets and liabilities. But there's no owner's equity in the different types of accounts. There's only assets, income, expense, liability. So the owner's equity consists of three things. Capital, the more capital the owner puts in, the more equity he will have. So if his capital increase, it means his owner's equity will be more. Okay, that is not liability, that is drawings. Second part is whatever the owner took out of the business, and that is his drawings. The more drawings he's got, the less owner's equity he will have. So if his drawings increase, his equity will decrease. Third component of owner's equity is profit. The more profit he makes, the more money he will have, so the more equity he will have. But in the accounting equation, there is no profit, or in the types of account, no profit. There's only income and expense. So how do we get profit? Income minus expense. More income is more profit, so his equity will increase. But if expenses increase, it means he will have less profit, so his equity will decrease. Good, so now that we've got the basic rules, let's go to a question. We're going to look at this question 1 in that pack of questions that you've got, where we've got to complete a table like this, which is analysis of accounts. It gives us a number, a source document, the type of journal it will be in, account debit, account credit, and then under asset owner's equity and liability, we must either say plus or minus and the amount. So we're going to run through the transactions and follow our rules of posting to the general ledger to determine what accounts, what type of account, increase, decrease, debit or credit. If we've got that info, we should be able to complete our equation. So the first transaction says 100,000 deposited directly into the bank account by the owner. So let's go to a sheet where we can do our calculations. So number 1, 100,000 was deposited into the bank account by the owner as part of his contributions. What will that be? What journal, first of all? If the owner puts money into our bank, it means we receive the money, so it's a CRJ. If it's a CRJ, one account, always bank. CRJ and CPJ, one account, always bank. What is it that he pays in? capital. So the other account will be capital. Good. We received money because he put money into our bank account. First of all, what is bank? Now, bank is a bit of a problem one because it can also be a liability. Normally, the money that we've got in the bank is an asset. But if somewhere in the information they tell me that the bank was in overdraft, it changes to a liability. Why? If we've got money in the bank, we can use it at a later stage. It is called an asset. But it can happen that we paid out more money than what we've got in the bank. In other words, we now owe the bank money. We make an arrangement. We call that an overdraft facility that we arrange with the bank. They will allow us to pay out more than what we've got in the bank, but then we owe them money. Then it becomes a liability. So we must just make sure in the information there is nothing that says the bank is in overdraft or unfavorable. In this case, there is no such information, so we can accept that it is a favorable bank balance. In other words, an asset. We receive money, so we'll have more assets, more money in the bank. What side do we increase the asset? On the debit side. Good, so we've got what will happen to bank. Capital. What is capital? It's part of what the owner has in the business, so it's owner's equity. The owner put more money in, so we'll have more equity. What side do we increase owner's equity? On the credit side. It's the same as a liability. So I followed the steps as I do with posting to the general ledger. Now I've got this information, I can go to the answer sheet and see how it will help me. So number one, if the owner pays money into, let's just go back to the, he directly deposits money into the bank account. Good, let's just, okay, so the source document is the first thing that we're looking at. The owner deposit money directly into our bank account. In other words, we did not receive the money in our store, so we could not issue a receipt, so it appeared directly on our bank statement. So the place where we will see it is when we get our bank statement. So the source document is bank statement. Okay. What journal do we put it on? We already figured that out. It is a CRJ. We received money. Okay, for account debit and account credit, we can now simply go and see what we calculated. We said bank, debit, capital, credit. So go back to where you did your calculation or followed your steps, and it is bank, debit, capital, credit. So account debit, bank, account credit, capital. Again, go back. We said assets plus. So go to assets, assets plus, and the amount was 100,000. Second one, owner's equity plus. So go to owner's equity plus 100,000. So if I look at the equation, assets equals owner's equity plus liability. So if I take 100,000 equals plus 100, and there's nothing there. So 100 equals 100, so my equation works out. So I'm done with number one. Can move on to number two. Computer equipment bought for 15,000 and paid by check. Pay by check tells me it is a CPJ. So the second one is a CPJ. CPJ, which means it is again, bank is always one of the accounts. CRJ and CPJ, always bank one of the accounts. And bank is an asset, We paid money out of our bank, so we'll have less money. Make a bank asset less on the credit side. What is it that we're paying for? Let's just make sure. We bought computer equipment, so we're paying for equipment. So the other account will be equipment. What is equipment? Something that we owe that we can sell later on if we want to, so it's also an asset. We bought some equipment, so we'll have more equipment. Make an asset more on the debit side. So now I can start putting it in. We paid by check. In the source document, we must, however, put in the actual document. We haven't got the check anymore. We gave it to the person that we bought the equipment from. What we keep in our store will be the check counterfoil. So not just check counterfoil. So that is my source document. I said it's on a CPJ. And let's just see what I said. I'm going to debit equipment and credit bank. So debit equipment in the debit column and credit bank. What was the amount? It was 15,000. There it is, 15,000. Good, so both were assets. So it is a plus 15,000 for the equipment that got more, but also minus 15,000. So I put them both in the assets because according to my calculation, they were both assets. So I cannot put them under another column but assets. Look, test yourself. Plus 15 minus 15 gives you 0. So 0 equals 0. So I still balance in my equation. Can move on to question number 3 or transaction number 3. A payment, CPJ, made by EFT to pay for the owner's son's school fees, 1,900. So let's just go to the analysis. We pay by EFT.